Did you know the current CEO of Medtronic hitchhiked across the United States during his college days? Not for vacation, but to examine universities with an ultrasound unit so he could ask professors questions for his thesis. Medtronic is one of the world's largest medical technology service companies, currently headquartered in Ireland. Though it generates a majority of its sales and profits from the US healthcare system, it is headquartered in Dublin simply for tax purposes. Founded in 1949, the company today serves hospitals, physicians, and patients in more than 150 countries worldwide. Medtronic's primary customers include hospitals, clinics, third-party healthcare providers, distributors, and other institutions. It also includes governmental healthcare programs and group purchasing organizations, or GPOs, who are all in need of medical appliances and equipment. Currently, they have 4 operating and reportable segments that primarily develop, manufacture, distribute, and sell device-based medical therapies and services. They are the Cardiac and Vascular Group, the Minimally Invasive Therapies Group, the Restorative Therapies Group, and the Diabetes Group. Now, I could bore you with all the details about each of these different segments, but most of us are not medical professionals. And as a stock market investor, we just need to know if this company's products and services are good enough for us to be able to make money. I'll be sure to include some footage of their products so you can visualize them. But if you are familiar with Medtronic's products because you happen to work in the healthcare field, please let us know what you think about them in the comments below. Also, make sure to hit that like button and subscribe to the channel, as it really helps out small-time YouTubers like me. In order to have all this top-notch technology, constant research and development needs to be made on existing products as well as to introduce new ones. Medtronic tries to focus on research that can reduce patient care costs and the length of hospital stays in the future. As with most other healthcare stocks, intellectual property such as patents, trade secrets, and non-disclosures are important to protect. Most of the company's sales are through direct sales and representatives in the US, as well as with independent distributors in markets outside of the United States. The 4 largest markets are currently the US, Western Europe, Japan, and China, while emerging markets are an area of increased focus and opportunity for future growth. No single customer makes up over 10% of sales. Alright, now let's take a look at Medtronic's financials. And don't worry, we will talk about that almighty dividend soon enough. The latest quarter earnings saw Medtronic report revenues of $7.7 billion, which was an increase of 3% from the year prior. There's also a breakdown of the different segments as well as by country. Most importantly, there is cash flow from operations and free cash flow of nearly $2 billion. While there may be all sorts of accounting tricks to inflate or deflate other statements, cash flow shows the cash coming in and the cash coming out. Sufficient cash flow is needed to pay expenses, interest, and buy new assets, among other business activities. Here we can see the company has consistently posted free cash flow even in times of a recession. Recessions are what separates an established company from a non-prominent company. The strong ones will always find a way to survive, and the weak ones will struggle to stay afloat or possibly even close their doors. Medtronic dropped nearly 38% in share price during the 2008 recession, but by the end of 2009, they had gained all that back and some more as well, with a 39% share appreciation at the end of 2009. Their average annual total return over the last 10 years is almost 13%. But to be fair, that's actually below the pace of the S&P 500 over the same decade, or just under 14%. Here we see the operating margin of 17.5%, which means for every dollar of revenue, Medtronic is keeping about 18 cents after the cost of goods sold and operating expenses are considered. It also boasts an impressive 69% gross margin. Okay, now let's compare Medtronic with some of its rivals in the medical devices sector. Although there are many players in this field, including Johnson & Johnson, I figured the most relevant ones to this operation were Abbott Laboratories, not to be confused with its spin-off biopharmaceutical company AbbVie, which we all own in our portfolios, as well as Boston Scientific. Medtronic and Abbott have the same exact market cap size of $154 billion at the time of me recording this, and Boston Scientific is only about a third of the size of these other two rivals. In terms of net income, this past year, Medtronic was the leader at just under $5 billion compared to about $4 billion and $2 billion by Abbott and BSX. Price to earnings is a quick gauge to see if a stock is either overvalued or undervalued. A lower number here is better. Using a forward PE, we see Medtronic leads the pack at 19. Return on equity is a measure of how effectively management is using company assets to create profits. Medtronic lags behind Abbott and especially Boston Scientific here at 14.5% compared to 23%. Quick ratio is a good indicator of a company's short-term liquidity position and measurement of being able to meet its short-term obligations. Medtronic has an exceptionally good ratio of over 2, showing me that the balance sheet is quite healthy, no pun intended.
Couldn't get Spock or Kirk, I would take the computer.
They have nearly $4 billion in cash on hand as of their last earnings report. I mean, it's always great to have that cold hard cash, right? A quick ratio of under 1 might be a bit concerning here, meaning that a company may not be able to pay off its liabilities in the short term. BSX really hurts in this category. Although you should never buy a company just because of its dividend yield, Medtronic again leads the pack here. Boston Scientific does not pay out a dividend. Rather, it chooses to reinvest profits back into the company. Though many of us here on the YouTube community only invest in companies that pay those nice dividends. So that's another big knock on them. Both Medtronic and Abbott Laboratories pay about 45% of their earnings to shareholders in dividends. They are both in the elusive Dividend Aristocrat category and should be on the Dividend Kings list, which is 50 straight years of increased dividends, by the end of this decade if everything holds to form. That is no easy task, and companies who are able to accomplish this do command some respect. Medtronic has free cash flow more than double the annual dividends it pays out. As previously mentioned, Medtronic actually has lagged slightly below the S&P 500 return over the past decade of just under 14%, while both Abbott and Boston Scientific have done considerably better. Of course, just because we saw past success, that doesn't always mean that it can be replicated in this upcoming decade. These last two of shares outstanding and number of employees are usually not factors I take into consideration, but in PPCE fashion, I want to say a job well done to all these hardworking employees that really are the engine that runs these companies. Without them, we wouldn't be able to do any of the thug life investing in these great stocks. Already looking into the future, the FDA just approved the world's smallest pacemaker, made by none other than Medtronic. The pacemaker treats patients who have chambers in their heart blocked from electric signals, leading them to dangerously slow heart rates. The Medtronic pacemaker is one of the few in the market that does not have lead in them, and the battery life is almost twice as long as the average pacemaker. The company will begin offering training to its physicians and medical personnel later this spring. Medtronic also recently acquired a private company that specializes in cutting-edge spinal cord stimulation technology to alleviate pain. It's just the little small things like this that make you feel really good and altruistic in investing in companies like Medtronic. I don't know, there's just something different about investing in a company like Medtronic than, say, I don't know, Altria. They really are pushing the ball forward and have over 47,000 patents in their arsenal. And over $100 million has been donated by the Medtronic Foundation. Again, this is a very high-level look into the company. If we went into every little detail about them, this video could last forever. I'm sure Medtronic has some really dark history to it as well. Being in this field, it can be susceptible to lawsuits, and healthcare in America, more specifically affordability of healthcare in America, is always going to be a touchy subject. But this is not a stock I ever really see anyone on our YouTube community own. I personally only recently heard about this company, which is surprising because I usually pay close attention to the Dividend Aristocrats. I think it's flown under the radar for far too long and deserves a closer look. And I think ironically with this coronavirus that's going around, this might be an opportunity for me to get in. I can't really see this being a sector being replaced by AI or Amazon. I mean, people will always need medical supplies. In fact, they're probably going to need even more of it in the coming years with larger amounts of retired folks who are living longer. Plus, it has all of those emerging markets around the world that it can offer its products to. So I want to hear what you guys have to say. Do you think this is a good stock to buy, or should I stay away from this industry? As always, my videos are never financial advice, and you should always do your own research before making financial choices. Don't forget to subscribe to the channel and leave a like on this video.